business. Ashok, hi, morning. Great to have you on the show. Firstly, tell me about the recent order win from the Ministry of Defence, that 120 crore rupee order for combat training node. And I believe that's India's first. Tell us a little bit more about its scope and opportunity size. Ashok, if you could unmute your mic.
So this is a combination of all our simulators and training equipment at one place, and so this is a very advanced training, offering that we are giving, and India has been the first to buy it, and we have been talking about since a long time. And if this is absorbed at at the level at which it is designed for, this could be a very big market for India and as well as other countries in the world. And the good part about this is, we can actually scale up. We start with, where unit level, but you can go to the core, we can go to the country, army level, and then we can do multi-country. For example, you want to, for fight a common enemy, we can collaborate with Taiwan, Japan, and India, can do a joint exercises, wargaming exercises, completely integrated with ground level operations. So this is a very big deal, and we are very excited about this, not only for India but the scope which it has overseas also.
Hi Ashok, good morning. Give us a sense what this means with regard to the opportunity size, in terms of, if you can give us a sense with regard to the quantification of the opportunity size. You've done 120 crore in terms of the order win right now. How large is the size with regard to this?
I would say that the scaling would take maybe between 3 to 5 years, but it's I would say it's a couple of thousand crores of size of the size is again, I'm very deliberately underestimating it, but if it really scales up, it's going to be very big and a game changer. Not only for Zen but as a country, the preparedness levels will be completely different. And not only for India but all our allies also.
Are you one of the few players here? Is there competition? Give us some color on that part.
So, again, this is a 33-year-old tech, R&D that we are doing for 33 years. And we have deep capabilities protected, adequately with patents and IP that we have generated. And, and these many simulators being offered by one company is not there. But if maybe 4, 5, 6 companies get together, and not Indian, but overseas companies get together, they may be having something similar to this what we are offering if they're able to integrate it. But again, with government's focus on IDDM being there, I think this would be very challenging for any person to actually come and build these 40, 50 simulators, almost 60 simulators that we are offering.
And how is the order pipeline in general shaping up, Mr. Atluri? Do you sense that you had indicated at the end of Q1 that H2 will be a strong cycle in terms of ordering? Are you seeing the pickup play out? We've started H2 over the last couple of months. Are you seeing a pickup with regard to ordering and is there more activity in general than you were anticipating already?
Yeah, so I think we're satisfied with what is happening, in the sense that we have got almost 500 crores worth of orders, and out of that, almost 250 crores are related to simulators, and the others are related to anti-drone systems. But again, a lot of orders still being discussed at the MOD level, and we are expecting a lot orders to come before March 31st. So we are actually very happy with the way the orders are coming in.
That's interesting. And given that a large chunk of the current order book has a 1-year execution deadline, tell me, when is it that you're hoping to exhaust this disclosed 554 crore rupees in terms of new orders?
So, I think most of them are, between 12 to 24 months, 18 months, most of them. So we do expect that all the orders that are coming will be executed by FY27, except for the annual maintenance contract, which are multi-year contracts. So whatever are the orders that are in the order book, especially the domestic orders, they need to be executed by FY27 for sure.
Okay. And Mr. Atluri, Q3 has already been very strong for you in terms of ordering. Where does your order book now currently stand? I believe you've done 500 crore plus in terms of garnering new orders for Q3. This uptick that you're seeing, can it sustain, is what I'm trying to get a sense of. And where does the order book currently stand at?
So it's at 1150 crores, around 1150 crores, and we think that the order book will improve from here. Uh, I would say significantly it will improve from here, and we already got 500 plus crores, and we expect more orders to come in. I'll not quantify it, but because till we get it in hand, we don't get it in defense. So I'll just hold on to that, and by March 31st, we should have the strongest order book position ever, is what our estimate is.
And this guidance of cumulative FY26 to 28 of 6,000 crore in terms of top line, H1 has been slightly softer for you, Mr. Atluri. H2, will that see a material pickup, or will the pickup only happen FY27?
No, we expect the significant pickup happening in FY27, and as I said, that FY26 is going to be a bit muted, and but FY27 and 28 are expected to be pretty exciting.
But why is that, sir? You already sit on a very healthy order book, almost a year of revenue in your order book already built in. Why is it that FY26 is anticipated to be muted? Is it just execution?
Yeah, see, one thing is that the orders that can be executed will be executed in the year FY26. But the orders that have come in now, especially in H2 that we have got, I think we have very short time to actually execute within the year, even though we will be trying our best, because we believe in executing as soon as possible. But I think most of them will spill over into FY27.
Also, talk to us a bit about the Anowave acquisition. 76% stake acquired. Does that enhance your capabilities, and if so, how? And what does this add in terms of your order book pipeline, visibility, capability? Give us a sense of that.
So there is no much order book in that, in the sense that they have a simulator order that they are in the verge of closing now. But in terms of capabilities, they are very, very deep. They have a lot of IP in the field of drone, anti-drone, and especially in the naval field, in the field of simulators, submarine simulators, and tactical trainers, in which our earlier acquisition, the advanced research ARI, didn't have that capability. So we with this we actually have a full suite for naval simulators, and that's what we will be going to. And that the team that's running Anowave is exceptional. I mean, they are just above out of the park, and we, with that kind of addition to the talent that we have in Zen, I think this is going to be a very, very strong and deep acquisition for us.
Mr. Atluri, also a quick piece with regard to your trade receivables. Currently stands at around 330 crore, and at the end of Q2. Talk to us about the payment cycle that you see in terms of your business. Is it just because it's government order driven and therefore payment cycles are delayed? And is that just regular course of business? Will you have 20-30% of your top line locked in receivables at all points of time, even going forward? Is that something one can expect?
So, we think the working capital cycle to be about 160 days, is the net working capital cycle. So, I think that is what we are factoring in. And, again, the government has been very, very preoccupied. We have, one or two players who can actually upset the whole cart in the whole system. But fortunately, government is cognizance of these facts that, delayed payments will hurt the industry. Actually, Zen is in a good position, but some of the companies are really suffering. So, but I think this is being addressed aggressively by the government, and the payments are coming. I think most of the payments have come through from the government of India now. To your question, we are factoring in this 160-day cycle, and we expect this may improve in the next couple of years.
Mr. Atluri, there's also been some discussion around margins, right? You do maybe 35-40% margins, and a predominant part of the order book is government driven and is defense driven, which is critical. Now while the government continues to focus on Make in India, I'm trying to understand whether these margins will come under any bit of pressure, and whether you're seeing early indications of that, just given the fact that it's so critical to India in terms of priority.
Absolutely. I think the order the margins will continue at 35% is what my expectation is, because, while the margins, domestic margins are not that healthy, we have seen the export margins are much, much healthier. And we see that, we are absolutely, one rule we have is, is our product the most cost competitive in the world? So, and we try to be most cost, and that's that price we want to give most value for the money that we give. So yeah, the margins we think will continue at a 35% EBITDA, and of course, the tax, etc. PAT may be around 25%, and that's the margin that we really need to protect if we want to create world-class products for the Indian Armed Forces. Without those margins, we'll find it very difficult to have the gunpowder to the dry gunpowder to acquire new targets, and also invest in further R&D.
Mr. Atluri, it's always a pleasure to talk to you, and it's so good to get that sense of how Make in India is evolving, especially when it comes to defense, and we get that feeler whenever we speak with you. So thanks so much for coming in and speaking with us.